Now, moving further with the next part, that is expenditure audit of government accounts. Now, how to understand this is, in case of government, we are doing two types of audits. One is going to be expenditure, other is going to be the receipt. Okay. In fact, we know that there is going to be receipt and expenditure only as an audit criteria. Now, as I told you, we have consolidated fund of the India, state, union territory. So there is going to be expenditure out of this fund, and there are going to be receipts onto this fund. That is amount payable out of it, amount payable into it. Correct? So we are going to do debits. Okay, how the audit has to happen, and for credits. When it comes to government audit, I would rather say what we are going to do now is most important, but you will not have a complete full-fledged question regarding what is expenditure audit. Under expenditure audit, there are 5 different types of audit. So we have audit against the rules and orders, audit against the sanctions, audit against provision. Then we have something called as the proprietary audit and performance audit. In exam, proprietary and performance, the last two are very, very important. Okay. Now, what is the meaning of all this? So if you look at the page 9.3, expenditure audit of government accounts, expenditure audit is conducted to observe the following standards. So we are going to do expenditure audit. So first is going to be audit against rules and orders. Tell me, in government department, is there any amount spent without any rule or order behind it? It is not possible. Either from the parliament or from the legislatures or from any other authority, a rule has to be made, an order has to be passed, and only based on that, you are allowed to make an expenditure. So first, we are going to see that whenever expenditure is there, whether expenditure is complying with the rules and orders or not. Second, for every expenditure, there is going to be some kind of sanction required. For example, sometimes the collector is required to give the sanction. Sometimes the state government is required to give the sanction. Sometimes there is some regulatory body which is required to give the sanction. So we will see whether the sanctioning authority, does it really have that kind of power to sanction? Okay, then. When sanction is correct, first then we'll see what audit against the sanctions. Then when sanction is done, one amount will be given. That amount is given as a provision. Okay, 10,000, 1,000 crore. That's the provision. So we will see whether it is within that or not. So we'll see whether provision made for it. Within that range only we have covered that amount or not. So audit against the provision of the funds. Then we have something very interesting called as proprietary audit and performance audit. Proprietary audit is so interesting because it happens in government department like this, that whenever expenditure is incurred, whether expenditure is incurred in the right manner or not. Meaning is what? Wasteful expenditure should not happen. Now there has been a sanction for a particular school. Maybe a chain of schools is going to be started. This project requires a sanction of maybe some 100 crores. All across the country, schools have to be opened. Now see whether this 100 crore is not getting wasted. That means, are they using the products, or are they using proper cement? Are they using proper manufacturing materials? Okay, or they're trying to, manipulate it. That means bringing substandard products and they're charging very high and pickpocketing, like filling their own pockets and all. Or where it is required only 1 crore expenditure, you're expending 2 crores. You're expending more than what the occasion is demanding. Wasteful expenditure. You are spending only on a particular sector of the society. All of these things are considered to be wasteful. So government audit says about this kind of proprietary audit, which simple language says, as a man of ordinary prudence, how he would have spent his own money. In that same manner, he also required to spend the government money. That is what is the concept of proprietary. If that money was yours, how you would have spent it? Did you lavishly use it, wastefully spend it, or would you calculate and then spend it? You would do like that. Exactly in the same manner, we are required to even use the government money economically also, effectively also, in the right place also. So to check that, we have this audit called as the proprietary audit. Then one more is called as performance audit. Performance audit, you can understand by the name of it, that in government departments, in the government organizations, or maybe the government by itself, gives a lot of policies, does a lot of programs and all coming into picture. Like you have Clean Ganga Mission, then we have Swachh Bharat Abhiyan, we have so many yojnas which are there. Okay, there are so many for, education, there are so many for girl education, there are so many for, water, sanitation, so many things are there. Where everywhere, every project, every program has an upliftment criteria in its own way. Now, whether these programs, whether these policies are having 3 E's fulfilled: economical, effectiveness, and efficiency. What is economical? No spending more. That means within the required resources, optimum utilization is happening. So economy has been maintained. Effectiveness means you're doing the correct thing. Correct? Efficiency means within the correct time period also. Efficiency means what? With less time, more work. Effective means correct work has to be done. So whether it is achieving its objective or not in the given period of time by making optimum utilization of the resources available. All the three things we check for these programs and projects. And this we check in which audit? It's called performance audit. So performance audit will check three C's of any program. Sorry, three E's of any program. Effectiveness, efficiency, and economy. Got it? So first is audit of expenditure. In audit of expenditure, we have five things. One, every expenditure has to happen as per the rules and order. So we'll see whether rules and orders have been complied with or not. So audit against the rules and orders. Second, for every expenditure, sanction has to be there. So audit of sanctions. Then they'll provide for an amount. So audit of the provisions of funds. Then amount should not be wasted. It should be as a man of ordinary prudence of he's using his own money. In the same manner, he uses government funds also. That's called proprietary audit. And then finally, performance. It is for all the government programs and the policies, whether they are maintaining effectiveness, efficiency, and the economy. Okay, now. So look at that first one. Expenditure audit is conducted to observe the following standards to see whether it is as per the financial rules and regulation, which is called as audit against rules and orders. It is made either by the said general or a special sanction, which we call it to be audit of sanctions. Then the budget of the funds is appropriate or not, which we call to be audit against provision of funds. Then you should maintain the general principles of proprietary, that is audit of that's proprietary audit. And then all the programs, the schemes, the projects taken up by the government. Okay, whether they are maintaining effectiveness, efficiency, and economy or not, that we call it to be what? Performance audit. So whether you are getting the required results within the given point of time or within time frame is considered to be the performance audit. So yielding results in the given time period is what we are checking. Means are they achieving the goals within the given time period? That is considered to be the performance audit. So now we'll pick up one by one. It's very simple to understand. Audit against rules and orders. Audit against rules and orders seek to satisfy that expenditure incurred is in accordance with what rules? Financial rules, regulation, and the orders issued by competent authority. So competent authority could be either the parliament itself, so in the parliament a decision has been taken, or in the assemblies it has been taken, or a particular official has been appointed and he has given the permission. Okay, like collectors and all, they have given the permission and all. So whoever has made the financial rules and regulation, whether it is happening as per that or not. These rules, regulation, and order against which regulatory audit is conducted mainly falls under the following category. See, audit against rules and order, just for your knowledge, in exam, they can also ask you the question, what do you mean by regulatory audit? Regulatory audit is nothing but audit against rules and orders. These rules, regulation, and orders against which regulatory audit is conducted mainly fall under the following category. Remember these. Rules and orders regulating the power to incur and sanction expenditure from consolidated funds of India and state. So first see whether there are actually rules and powers regulating, okay, the powers to incur and expend. That is, what are the rules and regulations which are there for the purpose of giving this order and sanctioning the amounts. First check that. Rules and orders dealing with the mode of presentation. Now tell me, when you require money from the government, is it that you directly make a phone call or just write a haphazard letter to them? Or there is going to be a proper protocol of which form you have to fill, okay, which office you have to submit it to, how it has to be presented. So don't you think that also under that also rules and orders are there? So the way in which you're going to present your claim, that also we have to check. So look at that, rules and orders dealing with the mode of presentation of claims against the government, then how the money has been withdrawn from the consolidated funds, contingency funds, public accounts of government of India and the states. Okay, so from three places money can be coming up depending upon the reasons: consolidated funds, contingency funds, and the public accounts. Then rules and orders regulating the condition of service, pay and allowance, and pension of the government servants. So now people working in government department, we call them to government servants. So for them also, there are going to be payments made, allowances given, pensions given. So don't you think they also should happen as per the rules and orders? Yes. So rules and orders for all these conditions and space. So three things. First, understand what are the rules and powers available for the purpose of, disbursing the amount. See whether mode of presentation is properly done, whether money is from the consolidated fund or contingency fund or from the public accounts. And finally, even also look into the condition, how they're going to maintain the condition and the pay of all the government servants. Pay could include allowances, pay could include all the perquisites, pay could include the pensions, the bonus, etc. Whatever payment has been done, whether it is as per rules and orders or not. Clear? So these three things we have to check for the expenditure, regulatory audit. It is the function of the executive government to frame the rules. Executive means top level government to frame the rules, regulation and orders, which are to be observed by whom? Subordinate authorities. So rules are always made at the top level, but implemented at the subordinate levels. Auditor is required to carry out examination of various rules, regulation and orders issued by whom? Executive. So always remember, orders are issued by executive, implemented by the subordinates. So here we are checking whether rules and orders are correct or not. So we are looking into whether executive power has been exercised correctly or not. Now, they are not inconsistent with any provision of the constitution or any laws made thereunder. Now tell me, in company we study a concept that articles cannot override memorandum and memorandum cannot override even the law. Or we can say articles cannot override memorandum, cannot override the law also. Correct? Similarly here, when it is coming as a sanctioning authority, rules and all are made. When rules are made, can they go against the constitution? Can they go against the existing laws? No. So you have to see that the rules and orders whichever are made, they should never be in contravention with the constitution or not in the contravention with any other law or regulation. They should be consistent with the essential requirements of audit and accounts department and audit, which are determined by whom? CAG. So three things: constitution, second, any law, third, anything given by CAG. So these rules cannot go against the directions given by whom? CAG also. They should not be in conflict with the orders of or the rules made by any higher authority. So if central government has already made an order, your order should not go against that higher authority. In case they have not been separately approved by the competent authority, the issuing authority possesses the necessary rule-making power. Sometimes maybe the department has not given the sanction. But then we know that everything will not be sanctioned beforehand. Sometimes as and when the need arises, that time sanctions are done. So we have to check whether anybody is going to do the sanctions, whether they have the necessary power or not. If some separate sanction has already not happened, then when you are going for the sanctioning of this, whether rules are there that any particular person has the power to sanction this or not. Okay. So here very simple, in regulatory audit, you have to look for rules and regulations. Second, you talk about the mode of presentation and the conditions and pay of all the government servants. Then with respect to all these rules and orders, we have to see that they should not be against constitution. They should not be against any law. They should not be against any orders made by central government, by CAG. They should not be any other things which is going against the higher authorities like central government. And if separate sanction has not been made, then when sanction is made, see that it is been done by the appropriate authority. That means the person who is doing the sanction has the appropriate power or not. So all of these things we check as a part of regulatory audit. That is audit against the rules and orders. Okay. Very simple points. 1 to 2 times you read it, you'll be able to get it. Audit of sanctions, very simple. Either you'll have a special sanction or you'll have a general sanction. General sanction means, okay, this amount is given as generally for this particular purpose. Sometimes special sanction means you take a particular claim and say we require money for it. So it could either be a general sanction for all these kind of projects or a particular sanction when you come for a particular task. So see whether you require a general sanction or you require a special sanction. Depending upon that, see whether the authority giving the sanction has the required authority or not, has the power or not, competence or not. That's what we check here. Very simple it is. Auditor has to ensure that each item of expenditure is covered by the sanction. Either it could be general sanction or a special sanction, but by whom? Competent authority. The audit of sanction is direct both in respect of the following: that the expenditure is probably covered by the sanction. Okay, the expenditure that ever you are going to incur is covered by the sanction. They have given you sanction for a particular school. Then you should not say that school, okay, includes the playground and everything, okay, agreed. But school, when sanction is given, if you're trying to develop the areas around it, then that might not be covered by the sanction. So you should see that whatever amount you're spending, that should be covered by the sanction. If the sanction is only for the school and all the matters connected to the school, amount should be spent only there. It should not go for beyond that thing. So the amount should be covered by the sanction. To satisfy the authority sanctioning it, it's competent for the purpose by virtue of powers vested by the Constitution. Okay. So whatever they're doing, the person who is giving this sanction, he should be given this particular power from whom? The Constitution. Okay. Then. So amount as well as the person giving should be covered by the sanction. Audit against provision, here the number is there. Number means if it is 10 crore, you have to spend only 10 crore. Okay, it should be 10 crore for that purpose. Auditor need to consider the following aspect. There is a provision of funds out of which expenditure can be incurred. That means you are providing the funds for this. Okay, providing funds for the school. Okay, is there a provision? Yes. Now see whether it has been actually for the school and for the limited amount which has been given there. The amount of the extra expenditure should not exceed the appropriation which has been made. So 10 crore given, more than 10 crore should not be there. So first, for the school, is there a provision? Check that. If it is there, amount should not be crossing that particular provision made. So purpose and amount both should be within the limits. Clear? That is regarding audit against provision of funds. Then your proprietary audit, as I told you, very important for the exam. You'll have a separate question on this. Okay, separate question could be framed to write a note or to explain the concept of proprietary audit. I told you here, very simple understanding is, as a man of ordinary prudence would have spent his own money, in that same manner is required to spend the government money also. So there should not be wasteful expenditure. Do not spend more than what the occasion is demanding. Do not spend it for a particular group of people only. It's government money to be used for the public at large, for general public, not for individual group of people. So all of these things, if you do, then we say, okay, the proprietary is maintained. That means you have not wasted the expenditure. Otherwise, it will get a negative comment and the amount will get wasted and will be reported by the CAG. Okay. Audit against proprietary seeks to ensure that the expenditure confirms the following principles. So what are proprietary principles? Not to waste the money. So there are three. Remember this properly. Expenditure is not prima facie more than what the occasion demands, and that every official exercises same degree of vigilance in respect of the expenditure as a man of ordinary prudence would exercise in respect of his own money. So two things here. Don't spend more than what is required. Second, use it as if the money belongs to you. Okay, two things are important. Authority exercising its power of sanctioning expenditure to pass an order which will not directly or indirectly accrue to its own advantage. That means do not spend the amount in such a manner that the money will indirectly come back to your pocket. Government money should be spent for the public. Do not try to make your own income here. So you are sanctioning it to the relative's project. Okay, and then the relative is going to give it back to you only. So it is going in wrong hands. Manipulation is happening. Proprietary not maintained. Do not spend it in a manner it comes back to you. Public money should not be utilized for the benefit of particular person or section of the community unless. Understand now you might see that sometimes we say, okay, the government is spending only for this particular, group. It is spending only for this particular section. Okay, allowed. But the amount should not be very big. Okay, so should there any amount of expenditure involved? If it is insignificant, a very small amount, it's okay, you spend it on a particular section. Claim for the amount could be enforced in the court of law. Meaning is now we saw that the temples and all been done by the government funds. Here the order is coming from where? Court. Now when court is telling to make that temple, now in this case, obviously we agreed it's only for a particular section of people. Even that will be allowed because the order is coming from where? Court. So you are allowed to spend for a particular group or for a particular section, provided the order is either coming from where? The court, or the amount is insignificant, a very small amount. Expenditure is in pursuance of recognized policy or custom. That means the policy has been approved already by the department and then you're spending it. Or amount of allowance, such as traveling allowance, granted to meet expenditure of a particular type, so as to be regulated that the allowance are not, on a whole, source of profit to the recipient. Sometimes what happens, a particular project is going on. Maybe it's in a very rural area. So that time what happens is what they do for this particular project, people who are commuting for the project, the manager, the supervisor, the architects, etc. For them, they also provide what? Allowances for travel and all. Because regularly they have to travel. Now, in this case, understand, if suppose that person is residing in that place only, and if you're providing him allowance, is it justified? No. That means the commuting time for him is maybe only 1 minute, 2 minutes. It is the same city, same village, or maybe in that same area he's living. Even then you're providing him what? Allowance. In this case, it is not proprietary. Why? Because here it is wasteful expenditure. It is nothing but he's not going to use that money. So it is going to be profit for him. So basically they say you are allowed to give it to a particular sector, provided that is required in that particular point. Suppose if the person is staying somewhere else, okay, 2 hours journey every day, and he is going for supervising a project. And in this case, if you're providing him allowance for traveling, it is acceptable because need of the hour, that spending is important. This is not becoming a profit for him. He's actually spending on the travel. Then in that case, are you allowed to give it? Yes. Otherwise, if it is just given for the purpose of allowance and he's making a profit of itself, that means he doesn't spend that money for that purpose and he's filling his own pocket with that. Then you're not observing the principles of propriety. It will be reported by the CAG. Okay. Only 3 points to be remembered here. Very simple. Prima facie, not more than what the occasion is demanding. That means the way you would have spent your own money, in that same manner you spend government money. Second, it should not accrue to your own advantage directly or indirectly. Third, prima facie, not allowed to spend for a particular sector, particular section. However, will allow you when first amount is very small, very, very small. Second, we are telling that an order has been passed by the court. Third, we are saying a policy has been made, a custom has been there from age-long tradition. So use it, no problem. Third, you're providing some kind of allowance and all these kind of features, but in such a manner, you need to understand that This is required in that given situation. It should not be a profit made by the particular person, recipient. Okay, in that case, we say they're all principles of propriety that we have to maintain. It is the responsibility of the executive department. Executive means the top level people are making the policies to enforce economy in the public expenditure. That means whenever they sanction any amount, see that you sanction only what is required. So begin with sanctioning. Spending is secondary. If you sanction only limited, then spending people also will spend limited. If sanctioning only is happening heavy, then spending also will be heavy. So don't start this from the operational level. Start it from the sanctioning level only. Function of audit is to bring to the notice of proper authorities of wastefulness of the public administration and cases of improper, avoidable, and ineffective, unproductive expenditure. Very important audit in case of government, okay? Because proprietary audit, because we see that in government sector, we see a lot of money gets expended. Okay, sometimes you see that there are some projects on infrastructure like bridges, roads, and all, where very poor quality material is used. And then one rain, one kind of flood, and the entire, the buildings collapses, or maybe the flyovers fall off all of a sudden and all. There you understand propriety has not been maintained. Meaning is the amount was sanctioned, amount was not used in the proper manner. So you'll be able to inform the proper authority if there is any kind of wasteful expenditure, if there's any unproductive expenditure, or maybe any avoidable expenditure. Sometimes, they're providing super luxurious stays and all for the people or employees and all, which are not relevant there. You're using public funds for enjoyment purpose, which will not be allowed. So these all can get reported under this proprietary audit. Clear? So that is the concept of proprietary audit. Definitely could be separate question, could be tested. Then comes to performance audit. In performance audit, you have to give the answer to all the E's: efficiency, effectiveness, and economy. This is basically for all the programs, the projects, the schemes which are coming from the government. I told you the examples like Swachh Bharat Abhiyan is there, Clean Ganga missions are there. Then you have all this Prime Minister Jan Dhan Yojana is there. Then, there are a lot of things for farmers, a lot of things for women education. Okay, then Sukanya Samriddhi. All these things are there, which are basically meant for what purpose? For a particular criteria. So that we will see here that for what purpose this particular scheme was started and whether the scheme is achieving its objective or not, yielding its results or not. Here, performance has to be checked. So performance will check in 3 E's. One, whether it is effective. For example, in between, cylinders were distributed for all the people who are not having this kind of, benefit. A lower group of people was given because they were suffering with all the other ways of, using this. They were not getting the supply of cylinders and all. So LPG gases were supplied. Then Sukanya Samriddhi is for a girl child and all. So here first, effectiveness. Effectiveness means whether only people who are in need of it got the benefit. Sometimes people also misuse this particular projects. They take the cylinders, they take this kind of, projects benefit even when they don't deserve it, when they don't need it. Correct? So in that case, we will see whether the particular projects are getting effective results or not. Only proper people who are required to be covered by the project are being given. Second, efficiency. Efficiency is using optimum utilization. Meaning is what within the limited time period, the goal has to be achieved. That means it is actually working perfectly well. Okay, no wastage happening. And what is economy? Do not spend unnecessarily. Every goal comes with a budget. Within that budget only it has to be achieved. Correct? So economy has to be maintained. No wasteful expenditure here also. Scope of audit extended to cover 3 E's. The performance audit is how many E's? 3 E's. Efficiency, economy, effectiveness. Audit, which is also known as performance audit or full scope audit. So in exam, don't get carried away when they use the word full scope audit. Full scope audit means full scope. How many scopes are the 3? Full scope means all the 3 E's are covered: effectiveness, efficiency, and economy. That's the understanding of full scope audit. First is efficiency audit. It examines the execution of various schemes, projects, and their economical operation, and also whether they're yielding results expected from them. What is the efficiency? Yielding the results out of it. Spending that amount in an economical manner and getting the results. That is efficiency. Economy is basically money matters. It examines the acquisition of financial, human, and physical. So all the resources that you require is man, money, and material. So economy, financial, and physical resources economically, and whether approving and spending authorities have observed economy. That means people are approving it, people are spending it. Executive and operational. Both are observing economy. They are not sanction heavy, they are not spending heavy. You have to see whether economy is mentioned. Economy is what required opportunity of spending. Effectiveness, spending in the right direction. Performance appraisal of the program, scheme, projects with reference to the overall targeted goals, as well as the efficiency of means adopted for achieving these goals. That is, you have to look into efficiency also and see whether goals are achieved. Understand goals are achieved after 10 years, not required. Goals are achieved within 2 years. Then goal is achieved. So you look into efficiency criteria also as a part of effectiveness. Goals to be achieved within the given time period. Okay, that is the understanding of effectiveness audit. So 3 E's, it's called as full scope audit: efficiency, effectiveness, and economy. Then comes to efficiency cum performance audit. Here you know all the things. The procedure of conducting performance audit will include all the points you know. First, you identify the topic. Then you do preliminary study. First, identify the topic. Okay, we are looking into for the program of maybe Clean Ganga Mission. Do the preliminary study. Why it was done? What was the reason? What was the need for it? Okay, what is the project? Who sanctioned the project? Everything. Then start planning. After planning, you do execution, and then ultimately you do reporting. Okay, very simple. So this is the methodology that you are going to bring up in the plan of efficiency and come performance audit. Clear? So that is regarding the 5 important expenditure audit, which for exam becomes very, very relevant. Okay, so you have expenditure against rules and orders, where you look into for rules and regulations, whether they are present or not. Then you have to see that the mode of presentation is appropriate and whether allowances and conditions for pay and everything are properly regulated or not. This is also called as regulatory audit. It should not be against constitution, not be against any law, not be against a CNGG, should not be against any higher authority. And when a particular sanction authority is not available, whether any authority doing that power has a necessary power to do so. Then look at the sanction. Every expenditure should be sanctioned. Either it could be general sanction or special sanction. And see that the amount spent is within the sanction limit given. Provision for funds. That means for whatever money spent, see that whether the sanction is actually there. And the amount that you're spending is within the appropriation that has been made. Proprietary, we have 3 points. You should not waste it. That means as a man of ordinary prudence, you would have used your money, same way you use it. Second, it should not be for individual benefit of your own. Third, should not be for a particular group or community. However, if it is insignificant, order of court, or it is by customs or regulations that have always been followed, then, or it is required for the particular purpose, not making profits to the recipient, then it will be allowed. However, first you look into the top level people only, they should be performing, observing economy. Then only the operational level people will be able to avoid the wastefulness of the expenditure. Unproductive expenditure can be avoided. When you talk about a performance, it is full scope audit where you look into all the 3 E's: effectiveness, that is yielding the results appropriately; economy, men, money, and material, all the 3, you have to maintain economy. So both executive and operational people have to look into economy. And last, effectiveness, yield results have to be yielded appropriately, but within the given point of time. So efficiency also has to be obtained or have to be maintained. Clear? And what do you do as a part of efficiency performance audit? First, you look into the topic, then you try to understand the preliminary study, why it was done and all, then plan it, execute it, and then come up with a report. Clear? So that is all regarding the expenditure audit.